In eIDAS 2.0, the relying party is the business that actually uses digital identities and trust services to make decisions. Onboarding customers, approving transactions, signing contracts. In this module, you'll identify where your organization already acts or could act as a relying party. Let's anchor one core idea. Under eIDAS 2.0, your organization is primarily a consumer of trust, not a producer of identity. A relying party is any service that uses electronic identification, attributes, or trust services to answer questions like, do we let this person in? Do we sign this contract? Do we execute this transaction? You don't create the identity, you decide whether to trust it. Strategically, that moves the focus from how do we issue IDs to how do we evaluate the wallet, its credentials, and its providers. Think of eIDAS 2.0 as a trust production line. First, an issuer is the source of truth. It proves that a person or organization really is who they claim to be and vouches for key attributes. Next, a wallet provider gives the user a secure container to hold and present those verified attributes. Then a trust service provider validates what's being presented. Are the certificates valid, not revoked, and at the right level of assurance? Only after those steps do you, as the relying party, make your call. Onboard the customer, approve the transaction, sign the contract. Your risk posture depends on how much confidence you place in each earlier step of that chain. Now let's ground the idea of a relying party in concrete situations. A bank uses wallet data to simplify KYC, approve high-value payments, or process a credit application faster and with less fraud. A mobile operator relies on it when registering SIM cards and preventing account takeover. Public administrations use verified attributes from the wallet to grant access to tax or health portals without recollecting documents. And platforms or SaaS providers can verify merchants and sign B2B contracts using qualified electronic signatures, turning identity into a shared, trusted layer across their ecosystem. When you think about being a relying party, don't limit your view to customer login or onboarding. eIDAS 2.0 touches three spheres around your organization. First, the internal workforce. Employee single sign-on, admin access, HR contracts. Wallet-based identity and qualified signatures can harden high-risk internal actions. Second, the B2B ecosystem. Supplier onboarding, partner verification, API trust, device binding. These flows increasingly depend on attestations and signatures whose validity you must reliably check. Third, the customer-facing front door. Payments, account opening, high-value transactions. Across all three spheres, the pattern is the same. Relying party responsibilities permeate day-to-day operations, not just the visible customer journey. In customer-facing channels under eIDAS 2.0, the focus is on moments of highest risk and friction. Think of large payments, changing beneficiaries, or rebinding a device. Today, these often trigger clunky extra checks, manual reviews, or out-of-band calls. With EUDI wallets, those same events can rely on a standardized, high level of assurance across borders. That enables stronger security while actually simplifying the experience for both customers and operations. When you act as a relying party, internal and B2B flows are where eIDAS 2.0 can quietly transform everyday work. Consider three recurring patterns. First, employees using high-assurance identity for privileged access or qualified e-signatures on contracts. That replaces ad hoc approvals, wet signatures, and manual user management. Second, core systems consuming verified attributes. So checks like, is this person really a director? Become automated, logged, and reusable across units. Third, partners authenticating via trusted identities and signed API tokens instead of bespoke one-off integrations. The business impact is less fragmentation, fewer manual supplier checks, and a cleaner audit trail for critical decisions. For eIDAS 2.0 strategy, it helps to separate volume decisions from value decisions. Profile A is your high volume, low risk world. Logins, basic onboarding, maybe age verification. Here, your wallet and trust service choices should optimize speed, conversion, and low friction. You still need robust assurance, but you primarily compete on UX and cost per transaction. Profile B is the opposite. Low volume, high value events like corporate agreements, treasury moves, or critical approvals. In these cases, the priority shifts to legal certainty, strong evidence, and higher levels of assurance. Most organizations need both profiles. The key is not trying to force one architecture or one risk posture to cover every use case. Relying parties don't all look the same in eIDAS 2.0, and that strongly shapes your strategy. A hybrid relying party is the two-speed reality most large organizations face. You have high-volume consumer traffic where you care about low friction and cost, running alongside much smaller, high-value flows where assurance, liability, and auditability dominate. You'll likely need different wallet journeys, trust levels, and controls for each. Specialized relying parties are different. Think health or legal platforms that only care about a few, very specific qualified attributes, like a medical license or bar membership. In those cases, precision of attributes and clear liability allocation matter more than scale or conversion. Risk posture and assurance are about making conscious choices. eIDAS defines recognized assurance levels from low up to qualified, but it does not tell you what's appropriate for each action in your service. You must decide, for example, which level is acceptable for viewing data, changing details, or signing a contract. That is a policy decision. And you stay accountable for it because using an eIDAS compliant method never removes your business responsibility for the underlying risk. As a relying party, your first operational task is to become visible to the ecosystem. That means registering with the relevant member state authority and obtaining the wallet relying party access certificate your systems will use in production. Next, build robust validation into your workflows. Every time you rely on a trust service or a signature, your system should automatically check its status against the EU trusted lists and validate it according to the relevant ETSI standards. Finally, make validation evidence defensible. Maintain tamper-evident, well-structured logs so you can prove what you checked, when, and with which result in case of disputes or investigations. To turn eIDAS theory into something actionable, you need a simple mapping pass over your landscape. First, build an inventory. Every channel where you accept identity or signatures today. Think beyond onboarding to account changes, high-risk actions, and internal tools. Then classify each one. Is it customer-facing, internal workforce, or B2B? Different categories will drive very different obligations and UX expectations. Next, profile the risk and economics. Which journeys are high volume and which are low volume but high value or high liability. Finally, align each cluster with eIDAS options, where wallets could replace existing flows, where qualified signatures are needed, and where lighter trust services are enough. As you move forward, keep 4 ideas in focus. First, identity. Wallets may carry credentials, but you remain the consumer of trust and decide when to accept them. Second, scope. Look beyond customers to employees, partners, and B2B flows. Third, responsibility. eIDAS sets the bar, but your organization owns the risk. Finally, action. Map concrete use cases and build a roadmap that is ambitious but realistic.